Hey traders, today's Saturday, March 11th, 2023, and I thought I would do a general video market review, top-down analysis, looking at current price action and maybe some review of the previous week. Had some good trades, but I don't really know where I'm going to end up with this video, so I just figured I would just kind of freestyle it a little bit and want to just get my general thoughts on the market out there, and you can agree or disagree or disregard altogether. But I'm starting with the dollar index. The reason why I'm doing this now is we've had non-farm payroll. We're a few months into the year, and I just think it's a good time to take a step back, zoom out, and have a big picture view of where things are. So starting with the dollar index, I'm on the 6-month chart right now, which seems extreme, but originally I was just starting on the monthly, but on the monthly, it's okay. I mean, we have this big range that we were in for many years, and then we've seen this breakout, which again, is this a genuine breakout? Is this a liquidity grab? Are we going to establish a new trading range around here? What are we going to do big picture? Now, from a monthly, if I'm just looking at this leg of price, first thought that comes to mind is that we've made this leg up, formed a high, and we're coming down and possibly making a higher low, and therefore we could see the market attempt to make a rally. Not to say it has to hit a new high. It could fail between here and up here, but just the thought that we might see a rally over a couple of months could help us formulate trade ideas for the next few months. So that's the first thought that jumps out at me, but I'm not entirely convinced of that playing out. I think there's, as always, just bullish and bearish scenarios. So if I clean up the chart a little bit, if I go to like a 6-month chart, it kind of, even a 3-month chart, it condenses the structures a little bit and just makes it a little bit more clean. The market had a consolidation down here at the lows in 2008 and then has since pushed up in 2015, created this imbalance. And if we look at just sort of this trading range that price was in before that push up, it's pushing up from about the midpoint, from about the 50%. Get a big displacement up, price comes down, hovers around the upper end of this prior consolidation. And then we get a new push up from the last year, from 2022. And we have a bullish displacement here where we've left this gap. So price came up and took both of these highs, breaking swing highs, and appears to be respecting swing lows. So we have these swing lows, and we're making a higher low, higher low, higher low, and breaking these swing highs. So we formed this swing high in 2017 and this one in 2020, and we've gone above. And for a period of time, it looked emphatically bullish, but in the last 6 months of 2022, we've sold off immensely from this consolidation up here. If I just take kind of the 50% of that wick, you can see that this is going to line up with, on the monthly chart, this bearish imbalance, more or less. So we could see a rally up into maybe around this area where the market might top out. And so dollar might just stay kind of in a general range for a period of time and not see a massive move. The other thought was, hey, maybe we've had this big wick. We've had this as a liquidity grab above these highs. We've filled this imbalance here. Maybe we're going to see a reversal of the dollar and we're going to come back into this trading range that we've been in since 2015 or so, and maybe come work our way back down towards the lows, which would have a very different effect on the market, in my opinion, if that were to happen. So that's why I have this level, this monthly level, marked out. Basically, are we going to see displacement on the lower time frames below this level? And at first, it seemed like, if I go like to the, let's say, the weekly chart, it looked like we were possibly going to see that. We started the new year more or less with what looked like a displacement below. But that displacement below was really just to, as you can see in hindsight, run this low and then quickly reclaimed it. And now we're back above not only this level, but the body, at least, of this up close candle. So this looks like more of a liquidity grab to see higher prices back up into this 110, 109, 110. But seeing how we closed last week, very sensitive around this high, another scenario is more or less that we just kind of keep kind of ranging here. And that would be scenario that I wouldn't be so surprised to see. So, I mean, where do we go with that? Well, as we move through the next few weeks and months, I'm just going to be noticing, well, do we get above this level? Do we see displacement? Now, on the weekly chart, we don't really see. Yes, we broke this bearish displacement. So on this move down, we have this gap, and then we traded through it in one pass and then have retested it and then continued higher. So that certainly leaves me more bullish on the dollar than bearish. But at the same time, we don't really have strong displacement back above this level, which is why I think the market rejecting here may see a return below this level. Not to say it has to impulsively go below. It can kind of, like I said, just come below it, consolidate, come up. So I'm kind of concerned that we might just see a kind of a long-term consolidation around this low. And so that's just something to be mindful of, because if you're expecting a strong directional move in the dollar, then that would dictate most likely a strong directional move in other markets. And so if we don't see that, if we don't see a clean break, if we don't see bullish displacement coming in on the weekly chart, in my opinion, it means that you just have to be more on a swivel with the day-to-day fluctuations on let's say indices or euro dollar, etc. So I'm not too attached to a bias one way or the other. I'm leaning bullish dollar, but because we've seen this rejection and we might be now on the daily chart working our way back down, maybe to fill in some of this imbalance down here. That doesn't mean I'm going to be bearish dollar long term. I'm just watching these levels. Are we going to lose support? We're kind of testing this support here. So we have this push up, resistance, break above it, turn support, big move up off of it, but then again, rejection at the highs, and now we're holding the support again. So I just see more consolidation for the dollar right now. I'm not uber bullish, not uber bearish, but I probably lean more bullish than bearish, if that makes sense, just because of how we did disrespect this displacement lower at the start of the year. And so maybe we come down, work some of these liquidity areas down here, and then see displacement up. So that's something I'm going to be looking out for on dollar. So that's it for the dollar index. I think now we can go and take a look at S&P. Let's zoom out to the monthly chart on that. And as I mentioned before, if you look at just the bodies, just look at the closing price, you can see that we have this resistance level right here, more or less. And go back to the candlesticks. The bodies, we've never really closed above here. And every time we've kind of ventured above this area, it got swiftly rejected back down. And so now, if we just compare to the previous month, so February, we've not just grabbed the liquidity below the low. It looks like we're really moving below it. And it looks like we have these 3 monthly lows in its sights that have not been swept. So my eye is going to be on, really, are we moving towards, like just looking at the monthly chart alone, it just seems more probable that we're going to reach for some, if not all, of these 3 monthly lows from November, December, and January. Now, it doesn't have to. Now, if we do see a swift reclaim, then this probe below the low of February was just a liquidity grab, and it will have effectively trapped anyone shorting below this level. But it doesn't seem very likely that that's the case. It seems way more likely that these are the targets that the market is going to be heading towards at a minimum. If you go to the daily chart, I talked about how in previous reviews, how this was kind of like a line in the sand level for me. This low created this high, which took the liquidity above this high and this high, failed to form a higher high, broke down displacement through the level. Then we hit this daily level down here. It's daily order block imbalance right here, and then had a very aggressive push up, and it did reclaim this daily level. So at this point, I was shifting to a more bullish view, because this was the line that I said, okay, if we're above this, I'm going to be thinking more of a bullish bias. However, on the lower time frame, as I'm about to point out, I want to highlight how when we broke below this level here, the way that it got respected here versus when we got back above it, how we did not respect it here. And on the lower time frame, I think it'll be a little bit more clear how you can assess this. So you're not guessing, okay, just because it broke above doesn't mean that this is going to hold a support. Because this is a support and resistance level, you can even just look further back how this was a more or less a resistance that turned into support and now it's failing. Support and resistance, the problem with it, as it's classically taught, is that it doesn't really account for all the liquidity grabs that happen around it. So yes, this is a support resistance that gets respected here, but it can reclaim it as these deviations can trap traders in the market in the wrong way, more or less. So the key is to see what sort of lower time frame displacement do we see in and around those levels. Back to the daily chart one more time for me to just make sure I have it at the right point. So this was the body of this candle, and this move up. We get below it. And look how in this pass, as we go below it, how this retest looks. So it comes up, the first time it hits it, notice there's a gap here, as opposed to, sorry, I'll try to keep them both in the frame at the same time. So when we pass down below it and we come up for the retest, there's a gap and it's respecting the gap and then creating a new displacement down, new displacement with new gaps. Then the market rallies back up. This is the general bias for when to trade using this as a bias and using the lower time frame to marry up with it. And if you recall, I took a short on Nasdaq, very similar situation. I didn't take it here because it was the close of the day. But as I saw an early breakdown right around midnight New York on this day, that's partly why I was able to capture this short from basically about here to here. It was in Nasdaq, but it was the same kind of structure. Now, comparatively to when we reclaimed this, we have to ask ourselves, is this reclaim a shift in bias, more or less? I mean, I was leaning bullish on this day, and I think I did post a recap on this day about how I bought and caught a nice trade here, because it did have me with this momentum wanting to be buying, and there was liquidity here, trendline liquidity here. But what the point is that when we reclaim it, we don't respect it at all. And there is even a little gap here. So this level does not hold. So that tells me the story that this move above this line in the sand level was a liquidity grab. And you can see the liquidity that it grabbed. All of these clean highs from this move down, all these clean highs, I mean, this lured everyone in. I mean, even myself, I was buying this. And because I read the market in a certain way, and because I have a plan where I'm not trying to be in a trade for more than, in some cases 20 minutes, 30 minutes, maybe an hour. It's such a fluid thing because these levels can fail and reclaim and fail. And so for me, it's about marrying what's currently happening on the higher time frame with what's currently happening on the lower time frame at the time of day that I want to be doing business at, which is in the AM session. So long story short, deemed this move above as a liquidity grab. So once we get this displacement back down, the bias becomes very bearish. Not to say that you can't take buys on if there's a setup. I actually did take a scalp long on this day, on Wednesday. The only day I didn't trade was Thursday. And if I go back to Nasdaq, this is the one mistake I made this week. I missed out on a really nice trade. So I was looking at this wick on Nasdaq as a place where I was going to look for shorts. And I wasn't as focused on this wick on S&P. Because I was more focused on Nasdaq, it had kind of blasted above this. And so I thought, okay, maybe Nasdaq wants to reach for this high and some of this imbalance here. And I hadn't really considered that, well, maybe it's just overshooting. And this is actually a good lesson. So this is one thing I want to remember is just remember that if I have a key level on, let's say, Nasdaq, like I did, just because it overshoots it doesn't mean that ES is going to be as strong. It might respect it perfectly. And that's exactly what happened. And if we look on this particular day, we have our open here, 9:30. This candle here, I'll just draw this out like this. So this was our 9:30 opening price. The market rallies. This is a Judas into this 50% of this wick. We have our basically our 10 a.m. turnaround, more or less. So we're in this swing high that's kind of forming here. It's forming at 10 a.m. So 10 a.m. is a time, if you look at my opening range videos, as I talk about referencing ICT, of course, it's like a very key time where 10 a.m. can be a key time for a turnaround. And there actually was. So what we look for is this run up here a Judas swing up? And how can we look at this as a liquidity grab? How can we have more confidence that it is? And if we look at how these highs are formed here, so at around 10 a.m., we get these lower highs. If I'm questioning, is this a turning point? This might be a turning point? Now, if this happened on Nasdaq, this is what I would have been. Let's just pretend that this was Nasdaq, because this is what I was looking for on Nasdaq. But it happened on S&P instead. Remember, Nasdaq overran the level higher. So S&P respected. I wanted to see it respect the 50%. We see it respecting 50%, move down. Then market rallies again, falls short of the 50%. At the same time, the dollar index is making a lower low. So we have a lower low on the dollar. We should be seeing a higher high on this, on the index. But we don't. So that's a good sign that actually this is going to be a turning point. Doesn't have to be. Doesn't always mean that because you see a divergence like this that you're going to see a reversal. You might, but it might just be very short-lived, and it might come down and fly back up. But it's because of the overall narrative before this point that I've laid out, where we had the bias shift on the higher time frame. Again, this was the key level for me. We reclaimed it. I was expecting it to hold because this was our support. I was expecting it to hold. It offered no support here at all. There's no setup to buy. It displaced through, had a little pause, continuation with another displacement, formed a long-term consolidation over the course of a day, day and a half. So we have our accumulation, we have our manipulation up, and then we're expecting it to distribute lower. And so when we see it under these terms where we get the divergence, and now where would we have entered? Well, the entry that I would have taken, and I probably wouldn't have captured that whole move. I'll show you why, what I mean by in a minute, because if we go to the 1 minute chart, so lower low fails to go higher. That's the first part of it, but then we need to see the displacement, and this is where the displacement comes in. Strong candle leaves a gap, takes out low here, and so this would have been the place to short from at a key time of day. So we're playing this, I would be playing this as a 10 a.m. turnaround. And so the reason why I don't think I would have captured the whole move is I would have seen this as a area to target. So, between probably around 2, honestly, wouldn't have been the best trade in the world. I mean, I love 2-hour trades. I'm totally happy with that. But I'm just saying, like, relative to the move that ensued, see how it came all the way back up, filled in the rest of this properly, then had the real sell-off. But again, I'm usually out of the market by this point. I would have been fine with that, and I wish I had taken it because it was a very clean setup. But I wouldn't have. It's not like I'm saying like I would have had this entire move down. Maybe a different type of strategy, a different type of approach, because that would have been really cool. But that's fine. I mean, I'm not looking for home runs most of the time. I really just want these kind of straightforward in and out. Like for me, that would have been great because I would have been in the trade and out of the trade in like 10, 15 minutes and then like done for the day. That's the one I missed, and that's fine. So now we're looking at, again, what happened. One thing I also like to point out is how price trends. When price is trending, I like to notice that, you get these little channels and you get these breaks of the channel. And what I like about this is, hey, we've got this trend line here more or less and a broken trend line. So this is a buy signal for some people who don't really look at the overall context of things on a bigger picture, because of course this can be a reversal pattern that then goes up, but usually this has to happen when you're at a very key higher time frame level after taking out, some liquidity here. You get this kind of channel, downward channel at a higher time frame, point of interest, and then a breakout. And then you can get a move like that. But that's just because you see the pattern doesn't mean that this is significant. A lot of times you see the way when price is in a bearish environment, you see this kind of big move down. It forms this little channel. It pokes up just for basically to take the liquidity that's here and fill some imbalance that's up here. And then very often then you'll see it slam down to new lows. In fact, sometimes this actually can be a good thing to look at. You can study this too, is a lot of times you see this channel, you do see a breakout. And even if this is a big support, sometimes the market can still come back down and make a new low and then trend. It's almost like, then this kind of will look like a double bottom on a higher time frame. When you zoom out, it kind of looks like it. So when those double bottom patterns happen, a lot of times it's like this, where it's channeling, breakout. It's kind of an early breakout, false start, if you will. Market comes all the way back down, takes out the bottom of the channel, and then does the move, inconveniencing people on both sides. Because when you have the channel and the breakout, you're kind of enticing longs. And then when it comes back down, you're kind of screwing the longs, and you're also enticing the shorts. And then you kind of screw the shorts, more or less. So yeah, when price is trending, and so when you get this strong move and you get a little channel and then you get a poke above, now I would have preferred it to just kind of hit this high in this gap, but it went a little bit higher. There's a little volume imbalance right here. I think it got it. Did it get it? Yeah, it's perfect. That high is 40.8250, and this open is 40.83, so about 50 cents off. So now we've seen our displacement down, and you can kind of look at this as like a breaker too. If I go 4 hour, you can see what I mean. So it's just going up, gathering all the highs here, the liquidity above these highs, filling this imbalance. And then on the way down, look how it doesn't respect this at all. It just gaps through kind of the origin of this move up. This becomes a breaker. Why is it a breaker? Because it's a rally up. So high, low, higher high, displacement, lower low. And then look what happened on Friday. Market rallies up to this level. Beautiful rejection, sell off. Did I get a short there? No, I did not take a short on Friday. I did actually take a long though down here as a TGIF. What's a TGIF? Well, if we look at the weekly range, and for a point in time, this was a very strong weekly bar, weekly candle that had the body all the way down here towards the close. And usually the week will close with some sort of a wick. In this case, it closed with a small wick, but for a period of time towards the end of Friday, this wick was like here. And so the trade on Friday on the TGIFs is we've had a big expansion. Now, if we have a higher time frame level and we have a setup at the right time of day, you can look for a buy back into the weekly range, targeting the weekly range. Not that you would target all the way up here or too high at all, but just to get that little move back up. What was the setup? So on the daily chart, we had, again, this move up that originated from this consolidation. If you just kind of look at, if you just take more or less the midpoint of this whole consolidation, you can see price tapped into it there. And this is the first time we're tapping into it, this order block. So that was a level that I was watching for. One of my friends alerted me to. And what was the setup? So this was an afternoon trade. First of all, let's look at it on the 5-minute. Displacement up through this up candle. So when we're in a bearish trend, we expect up candles to resist price, whereas this up candle had no measure of resistance whatsoever. So basically, mark that candle out and we get this big gap through it. But on the lower time frame, it's a little bit cleaner. So if we go to the 1 minute, I liked how this was this up move here, this move down, broke above it, try to reject back below, then big gap. So my order was right off of this level right here with this gap. So this old distribution got reclaimed impulsively, left a gap. And so before it even gapped, actually, before this move happened, my order, I set it right here. I thought I was that confident in it just because this was such a higher time frame level. And we had this imbalance up here to reach for, but we came up here and I noticed we still had this gap here. And so because we were late on the day Friday and we were coming off such a higher time frame level, I thought it was still worth the risk to see some sort of pushback up. And so I think my stop was down here. Give it a little space below this gap. I took a partial. So when this shot back up here, I took a partial here. Just because in case this was the retest of this and then it was going to just kind of sell off and make a new low, I just wanted to make sure that when we did get a pop up, take a partial, and then the rest of my position was taken off here at this high. So that's kind of the view on S&P. And like, as I said, I think these monthly lows are vulnerable, to start the next week. If we trade up into this up close, again, if we're moving down, we want to see up close candles resist price. Now we're not really moving down on the weekly chart, really, like in terms of the overall structure. We're kind of just in this range, but in the recent leg of this range, we are moving down 1, 2, 3, 4, 5 consecutive lower lows. So, and then we have these clean lows here. So I do like the odds of us kind of reaching for these lows in the upcoming week. It's all about where is price going to like give us an entry. We don't know that until our session times, but I kind of like these daily levels here. I kind of like, you have these wicks here. So maybe we go back into this gap. This is our monthly level. So maybe we could raid. We could actually, in an overnight, maybe we're trading close at 9:30. We're right around here. Let's just hypothetically say. I don't know for sure, but now we have this monthly level. We have this high from Friday. Maybe price is trading kind of here right before 9, let's say Asia range, whatever. We're kind of in this area. It looks like maybe we're rejecting these highs in London, more or less, get a little move down. And then at New York Stock Exchange Open, maybe we get this liquidity grab above these highs into this imbalance, and then we get a breakdown. Just an idea, not like a hard and fast prediction, but that's the kind of thing. That's why the difference between where we are now and what I'm going to do next week is really just dependent on what price action exists at the open. And you can't, how could anyone know what, Asia session, London session is going to do before New York? So that's just the kind of thing I want to see. But, you never know. Maybe it could just gap lower and just keep trailing down. And then that similar idea maybe plays out kind of down here, more or less. So that's why just give yourself a little bit of time before the open and do a read on what happened and what imbalances remain above price or what key highs remain above price that you can use as a reference point. And then, again, not to say you can't be buying. Maybe price just straight melts and then takes out these lows, and then you might see a setup back up into the range to rebalance a fair value gap. That could definitely happen. So that was ES, same idea. I'm not going to spend as much time on NQ. Same kind of idea. You can see that we've had these monthly highs, these candles, monthly highs, their bodies and they're open, and even the wicks as well, from October, November, December, January. We're unable to move above on a closing basis, this area. I thought maybe on February we could, but again, just rejected back down. We have this volume imbalance right here. And so now we're below the last month's low. Go yellow. And now what I want to see is how and with big wicks here and here. So I want to see how impulsively are we moving through this level on the lower time frame. And the lower time frame relative to the monthly would be like a daily, weekly, 4-hour. So we haven't really displaced through it much on the daily chart. On the weekly, again, we're kind of just poking through it and we're closing through it. But this doesn't give me confidence to say that we're going to like straight up. Let's see, 4 hour. Let's see what it is. Again, we're not seeing any displacement through it yet. And so that tells me that the market might not be ready to drop yet, or I'm not going to short here necessarily right away. We might see some sort of consolidation first before a drop. Maybe it comes up here, runs this high, and then we get a straight displacement here. And then with this low, more or less, you come in and that's the short setup down. So that's kind of how I'm going to be looking at it with respect to this monthly level. Now back to the monthly. Let's see, did this make a lower low? Okay, so this did go lower. I remember that actually was part of the framework for why I was looking for buys in January. It did probe below. So, you know, they still do kind of look relatively equal, and you do have a kind of this higher low here relative to the October low. So, you know, maybe downside objective in the bear scenario, I wouldn't want to short. This looks really good as a buy, honestly, down here. And so if we were short, I would be wary of this area because I do think you could see a clean bounce here. Now, what else is in the way? Again, this could just be a consolidation. We don't have to displace down through it. Maybe we just get kind of a slow grind. And we do have this area here, this structure here. A friend of mine is very interested in. But if you look at it from kind of from this perspective, we had been in this downtrend. The market came up, consolidated, couldn't go higher, broke down, came back for a retest, looked like it rejected off of this as a clean retest, but then expanded quickly above it. So this is an area where you could say that people are trapped short based on this. And so when the market comes into it, we could see a nice reaction. Now, I don't know if that is going to be a reaction to, you know, to these highs, or if it's just going to be a tiny little bounce. But it is an area to be aware of. And if it aligns with our lower time frame setup at the key session time, then, you know, I could look for a buy off of this area, targeting whatever resistance levels are created on this move down. So that's basically my look through on ES, Nasdaq, and the dollar. Let me know if this was interesting to you or helpful. You know, would you like me to do this on other instruments like, you know, FX pairs, Euro, GU, whatever you guys trade? I do like doing it when I have the time. It's just a nice practice for reading price action. And even if you're wildly wrong, it's good to see kind of, you know, a week from now, 2 weeks from now, how it ultimately played out. Because you can't see and predict everything into the future at a given point in time. But what you can do is have an idea of what you're looking for, and then see how price either confirms that or you know, disproves it as it's happening. And I just find it helps to stay in sync with the market. So I don't really hold on to this with like price must do this in any way, but it is just a way to give some structure, some mental framework to it, so I'm not caught off guard. So anyway, I hope this was helpful. I hope if you like this video, if you like this type of video, please let me know. If you thought it was too kind of aimless and all over the place, I understand that. Let me know if you think it should be more structured and less rambling. I'll take that into consideration moving forward. And that's it. So I hope everyone has a good week, and I'll be back again soon for another video. Take care. Bye.